Good morning, everyone. It is Throat Punch Thursday, May 12th, and here in just about a minute, not even a minute, you're going to hear the jobless claims and the PPI number for the month. I'm going to go ahead and let those play through, and we'll see the reaction here on in real time. Here's a look at our ES. You can see that we are continuing to fail here. We are in a bear market. There is no doubt about it. And we will kind of watch those levels. Not sure I really love those, but let's see. Trying to grab some, yeah, I don't really like any of those. All right, I'm going to take these out because I don't like any of them, and we've gone through all of them at this point here. So we'll look for some longer term trend lines.
Jobless claims of 203,000. That's above the 195,000 estimate. Continuing claims 1.343 million versus the 1.38 million estimate.
Coming in a little higher at 11%.
There we go. So there's our reaction here. We'll wait for that reaction to play through. So I'm drawing these trend lines on here because it's one of the questions I get asked an awful lot is where do you draw your trend lines? How do you know if they're in the right area? But, you know, you just kind of grab them from where you feel like they are. You can kind of see a pattern. So, like here, I can kind of see a pattern, which means we have more downside.
PPI.
A little higher at 203,000.
Core PPI plus 0.4%.
Which is right in line with the consensus and what was expected on the PPI data. Okay, I'm going to go ahead and leave this here. So, this level, this line here, and you'll see these kind of coordinating on the SPY as well. I didn't draw all of them in, but I do have some of them in. Today, we've pushed through the initial trend line that we had from, super short term. Here's our next one, which is pretty close to where we are. We're looking at about 380, 87, maybe there on the SPY is what that would correlate to. We have pushed through our initial area of support, and we now have another area down here. And I would say about 380 is probably where we may touch here before finding any kind of a bottom. Now, are we going to find a bottom and reverse trend? I don't know. See, that's the thing. I don't know. I don't know if you don't know if you're at a bottom until you're no longer there. But what I can say is that the overtones in the market, this is a kind of people throwing their hands up in the air saying, okay, I'm out of everything. I'm taking my losses. It's something that we've seen an awful lot in previous bear markets and even recessions. So when we look at whether it's the housing, the tech, the financial crisis, all of these things that came to our markets, and it wasn't until you had a lot of those long timers just say, you know what, I'm out. I'm out. And that's where you start to see your bottom. You see a little bit more capitulation, a little bit more push down, and then we can kind of stay at a bottom for a while. So just because I'm saying I think we might either be entering that bottom part of the canyon or maybe getting close, until there's an actual trend to the upside, we are in a bear market. So we can get these nice little pops. This morning we are looking to open, while we see that the Europe is down more than 2%, and S&P futures, although coming up a little bit up off of the lows, we had been down over 200 points, and then we came up and we were about 45 points down, and then we went back down to over 200 points down, and now we're kind of playing around the 150-ish down, and that's all in the Dow. So a lot of volatility as these numbers come out. A lot of volatility as the news gets digested and that report gets kind of torn apart. Producer price index at 0.5 versus the 0.5 estimate. When you strip out food and energy prices, that's something that we saw yesterday. If you strip out food and energy, oh, see, now there's a lot of PPI versus food and energy is up 0.4% versus 0.6%. So that's actually a little bit better than what we would have expected. But PPI, if you take out that food and energy, again, it's a bit different of a picture. Food and energy, and we don't need to be told this, right? We know that when we go to the grocery store and fill up our gas tank, that there's a lot of inflation. So we're watching and waiting for that peak of inflation, And a lot of people are looking at all of these data points saying, well, maybe this is it. Again, we don't know we're at peak inflation until we start coming back the other way. Meaningfully. So not just a little bit here or a little bit there. Meaningfully move in the opposite direction. Okay, all of that being said, there are some nice plays to be had. And I'm taking a look at K&B here. This is the weekly. So K&B, Kimberly-Clark, you know, if you've been in any kind of public bathroom, you've probably seen Kimberly-Clark at some point. They do all sorts of paper products, industrials. So look at this here. They do have pricing power, and that gives them, and of course this is in a Staples as well, that gives them the ability to kind of have some continued strength. We are still going to go buy toilet paper no matter what. So here we are, Kimberly-Clark, up after earnings and held a big portion of the gap, stayed over the 200. So I like the way this is looking here, maybe a small bull flag. A double inside candle day yesterday and Tuesday were double inside candle day. So keep an eye here on Kimberly-Clark. I like those June 17th 140 calls. I like an entry at 138.96, or I just wait till 139, stopping at about 137, and just looking for a creep back up and a break through the 145.79 eventual target there. All right, I gotta actually update that, put the wrong number in there real quick. Okay, next, MERC. So MERC as well, post earnings, nice big bump, and look at this, just sideways consolidation. You looking at this, it doesn't look like the market's been crazy, right? If you compare them, MERC has just been holding in very well. We did have a big push up, as we did in the market in the morning anyway. It went with it, but came back in and still managed to close higher than the day before. So like the look of MERC here. And I like an entry at 89.18 and a stop at 88.45. All right, and a downside play, FCX, copper and gold. No flight to safety in a lot of these gold names. Looks like here we crashed, well, it doesn't look like, we did crash through the 200. Some pretty big volume over since their earnings. Right, and it just looks like a bear flag setup. What does a bear flag look like? Well, you would draw it this way, a possible up, and then we'll see if this is the outcome. All right, so that's what a bear flag would look like there. On FCX, if that does continue to follow through to the downside, I like the FCX 33 put. Some energy actually held in pretty well yesterday, so look at some of those energy names. We did get a pretty big downside pull later, but we have a nice 3,820 squeeze, so keep a look on that and see if we get another bump up. Of course, pretty much every tech name you can put in the down category. Apple in particular, really, really just getting the snot beat out of it. Not seeing anything in any of the travel industry either. That looks like a bear flag setting up there on EXPE, Airbnb, depending on today's action, potentially a bear flag. Shopping, just discretionary type plays, continuing. This is a bear flag that played out yesterday. We'll see if we get continuation on it. eBay, Etsy, just melting away. And I said, like, that some of those big tech names just getting crushed. We also saw Disney report last night. Initially, it was up a bit, and we'll see that coming in and weighing quite heavily on the Dow here this morning. All right, everyone, I hope you have a great day. If you have any questions, reach out Heather C. at givingtreetrading.com, and I hope to hear from you soon.